Hey guys, Doug the Retirement Guy here. We have a new series we're starting off with. It's called Monthly Paying Dividend Funds. 45 different funds we're going to be reviewing over the next 30 days.
We have a review this time of EPR Properties. EPR Properties is a REIT and it's paying an average 6.81% dividend yield. Let's take a look at this one today. EPR Properties, as I said earlier, is a diversified real estate investment trust. But here's the thing they do, and I think we've talked about this before on the channel. They specialize in enduring experimental properties in the real estate industry. And what I had to look at that and say, what are you actually talking about with that? And what they do is something totally unique. And I've told you before about this, is that REITs can be all different kinds of things, but they are really looking at what they call out of the home leisure, recreation, and social experiences. So they're not always just looking to buy an office building or a warehouse and do that kind of stuff. What they have is $6.9 billion in total investments, 346 locations, and there are over 200 plus tenants in the US, operating in almost 44 states and all of Canada. So when I looked at this, I said, okay, what actually are you into? Because I wanted more information about what is this social, social infrastructure you're dealing with, recreational, and all the way through. So when we did our holdings on this and we went deeper into it, they are doing a lot of eat and play. And we really can't put the name out there because of, they're not locked in, but think of top golf areas. Think of the bowling and go-karting areas, family entertainment centers. They are into casino resorts, gambling. They have the lodging, RV parks, national parks, uh, basically campgrounds throughout. They have ski resorts that they're dealing with. They have fitness centers. They have venue concerts, e-gaming areas. So they're looking at a lot of different components of this to where they're investing in properties, they're investing in other areas, in amusement parks, water parks. So a lot of the stuff of think about everything you want to do, that if you're going on vacation, you're probably going to get one of their experiences out there. So it really holds to me as if economy is good and things are going strong, this thing's going to rocket and do very well. So what is a REIT? So let's get deeper into that. And the advantages of a REIT, first off, a REIT is a real estate investment trust. Simply put, they put you as the investor into real estate. They can own different types of properties. As I said, you can own warehouses, you can own offices, you can own apartment buildings, you can own amusement parks. It's all how you want to build your empire of real estate through REITs without really owning the property. I can tell you right now, I would not want to be an owner of a amusement park that I have to go to every day and deal with all the people and deal with the rides breaking down or doing all that kind of stuff. I would be on the rides 24/7. So this is where you want to invest in something different, you can be. Now, the unique thing of a REIT, and this is the one I love the most, is that they are required to distribute 90% of their profit to their shareholders. So a lot of REITs that we're looking at now are monthly paying dividends. So they are basically every month, they're putting out their profits back out to the owners. Diversification, as I just said, you can be diversified in multiple different facets of real estate, not all your eggs in one basket. So it gives you a wide opening to it. And most REITs have outperformed the S&P 500 and other corporate bonds. So they're long-term investments. These are not things you're going to buy today, sell tomorrow. These are things you're going to buy and hold for long periods of time. So why EPR? Well, first off, advertising at 6.81% dividend is an impressive number. and it's a solid piece to build on. The next one is the growth of their dividend. They're growing their dividend by 3.61%, and they've done it over the past 3 years. So as the profits continue to roll in, their dividends are continuing to go up. Now here's the big one, the stock value. Over 1 year is 18%. Over 5 years, 45%. So this thing has a steady, smooth growth moving forward. Then they offered a monthly dividend, which is great. And this is why we're doing these reviews, is because we love here on this channel, we love regular cash flow. We love monthly payouts so that we get every month, we get our check, we can pay our bills, we can go off and do what we want to do because our money's working for us. Other people, you can reinvest the paybacks and grow your fund by constantly increasing every month, buying more and more shares. But let's take a look at EPR's 1 year. This one is really got me where I was impressed with, and we're really doing well here. If you take a look at what happened in March, and I know I always focus on this, but this is the latest thing to show you the strength of a stock. Stocks were climbing well, and we hit that March, and you see that in the first arrow, that we had a slight drop off. Nothing spectacular for this fund, but we had a slight drop off, and then it held. Then April kicked in, and when April kicked in, we had the huge drop. And if we all would have been a part of this, this is where it would have been a great buy program with it. But now take a look at the track out of the basement. It is rocketing up and continuously growing, because what they have found that this fund and this company is not poorly managed. It's not a performance issue. It is a scare factor from the tariffs that people are looking and saying, forget it. This is not going to be affected. This is not going to have a problem. Continue moving forward. Go after it. 1 month, 19.96%. If you put money in there and gain 20% in 1 month, this is phenomenal. 6 months is 15%. Year to date, 18%. 1 year, 26%. And 5 years out 90+%. So that's even bigger than the number that we originally were reported in the 5-year mark. Now this one, I always like to look at the 5-year mark for a particular reason, and to see, did this thing just rocket up and then we come back down, or is it holding for long periods of time? And over 5 years, you can see, back in 2020, we had the old pandemic that we had to deal with. And of course, people weren't traveling and they weren't getting out of the house. But as soon as they were able to house, this thing rocketed up and took off. And it's holding itself as we go along to perimeters up at that $50 price range. So very, very strong over 5 years, of course. Now we look at their dividend chart, and you can see originally 10 years out. And this is what I love about these reports, that I can go 10 years out, and you can see that they were slowly and steadily increasing their dividends over and over and over. Then they had a readjustment, and that basically took their dividend, reorganized it, and now they're moving back up to where they were before, giving you 29.5 cents. The growth factor of their dividend is what is also exciting to this. And here's the growth factor. Look at what they've done. They're up 3.5% already for 2025. They are slowly raising this as the income and profits are coming into the company. They're continuously raising their dividends. Now, they were as high as 10% back in 2023, but now they're keeping it really tight in that 3.51% growth rate, which is very comfortable on a regular basis. So what we have done with this one, we've put this $10,000 investment in the EPR back in May of 2024. We were able to buy 241 shares at that time. As we go through now, we have a 21.6% growth in our stock value. because that shares are all the way up to $50.36. Now take a look at the chart and you will see both in in April, we had a drop off. We had about a $7 drop off, which because we had so much gain already, and we pretty much almost gained $5 of it back, we were able to hold on and stay positive, stay green through the whole time. Then when we take a look at the dividends, which is what we're really concerned about, is that we're sitting here and getting 29.5 cents now. And you can see the increase that they had, which basically was in February, that we're now at $833 of dividends, which is an 8.33% return. So we were able to capture 8.33 when they're advertising 6.91 or 6.81. That's because the stock value is continuously going up and we're buying at a lower dollar amount. So very, very strong returns across the board. We can sit and brag we're making 29%, almost 30% in 12 months off of this stock. Now, EPR is very smooth. You can see we have not had a lot of, in the past 12 months, we have not had a lot of drops and bounces, and we've stayed at that point. $46.20 is the average price right now, and it's selling for $50.36. Now, even if it's over its average, it's still climbing. We still have probably at least another $2 to $3 to get back to where it was prior to the March and April changes. So I think we still have a good 5 to 6% growth in this stock price until we start seeing this thing saying we're going to continue on and grow even more. So it's not on sale, but it's a good buy, I believe. So is EPR good for a retirement account? And my answer is going to be a definite yes. Now, the dividend is good. Their advertising, I said 6.61 is very good. We're getting 8.82. I love that. But I'm going to put this, if we get 6.61, I'm still thinking we got a good fund because the NAV return, 21.6% gain. If we use the standard that they have of 18% on average, it is still phenomenal. Your stock value is going to be worth so much more as the dividend continues to grow. So a total return of 29.94, I would definitely have this in a retirement account and not worry about my money on this one. So we put this as a moderate buy. I would love to put it as a strong buy, but until that price, if we couldn't get something closer to the average, I wouldn't go strong buy. If we keep it at that where it's at now, we're going to go moderate buy. Guys, this is Doug, the retirement guy. I hope you like what we're doing. Give us a thumbs up. We got those 45 videos we're going to be doing. Don't miss a single one of them. I'm telling you, this is going to be one of the biggest things we've done in a while. So hit that subscribe button. Don't be afraid to miss out any of those videos. And if you like what we're doing, hit the comments. If you don't like what you're doing, hit the comments and tell us that you don't. Hey guys, everything helps the channel grow. We want to thank you. We're here to help you grow your money, and we'll see you at the next video.